Welcome back, everyone, to another episode of Economic Preppers. I'm here with Dylan. How you going? How you doing, buddy?
Doing great. Doing great. How about yourself?
Oh, I'm hanging in there. Watching Bitcoin soar. Getting all these different messages popping up, and all these people that are crawling out of the woodwork and saying, "Hey, you're the crypto guy." When Bitcoin is high, like that's where they all come from. It's funny how they're not around when it's 20K, but when it's at 60K, they want to talk about it. It's funny how that works.
Yeah, are you getting people that are reaching out? I've had some, but surprisingly few. I've seen more posts on social media, but I haven't had like a bunch of people reach out being like, "All right, I need to buy some now."
A couple. I mean, just people that were on the fringe of asking about it in the past, or and they're starting to pay attention. I think it'll really kick in. I think I heard a stat when Bitcoin was like 57, 58K, Bitcoin's only been above that line for like 5 weeks of its entire life. So
Yeah.
when we break to 70K, that's when people will really start to come out of the woodwork, and all the all-time high stories will come out. And who knows when that's going to happen? It could happen. We've gone from 50 to 60 in less than a week. It could happen. It could happen in the next month or so, but we'll talk about that. Let's dive right in. We
Yeah.
got lots to talk about here.
Yes, we do. We do.
The first off, like a couple stories at Zero Hedge. Just want to highlight, just like inflation is the number one thing. Obviously, everybody's talking about the border, and that's a big deal. And then with the candidates are all out there, campaigning. We won't get into that, but a lot of that we're talking about we're economic preppers. So the economy here, like I've been hearing stories about surge pricing. I've been like similar to what if you've ever taken a Lyft or an Uber, Wendy's is starting to they announced that they were going to charge more at certain times when they had high demand. And I also heard that wrong story. Kellogg's, that they're saying eat cereal for dinner. Like this is all about inflation, like how people are managing that. And I even heard that California is coming up. I think in April they're going to raise their minimum wage like $20, and I'm hearing stories about like $15 to $20 for a Happy Meal at McDonald's. It's just like insane pricing that's out there.
Yeah.
It's like, how do you cope with these numbers? That's what people are looking for, alternatives. Dylan, what are your thoughts on this before we dive further?
Yeah. These are very important issues to be concerned of and pay attention to. So I live in a mountain town. Okay. And so this is with luxury, condos and all that kind of stuff. So those are the type of people that live here. And so you have the dual culture of, you have the tourists, and then you have the locals. And the big issue that's happening is that the local economy is highly dependent on the tourism, right? If you have a good tourism year, you got a lot more people visiting. They're spending more money, right? They're going out to eat, right? They have a lot more disposable income. They're staying longer. They come back maybe 2 trips instead of just 1 trip, and it all adds up. And so I know a lot of people here that are working in the service industry, and one of the biggest issues that people are running into is that um, there's not as many people coming out here, so it's not as busy. And the people in the service industry aren't making as much money as they're used to making in the season. And of course, everything's more expensive. And then on top of that, we're seeing like this weird push because of technology and just the evolution of people making payments, of this pushback against tipping. Okay. So now you have this like issue. I can go into a whole conversation about people that complain about tipping on another maybe another time, because we have a lot of stuff. But you have this pushback, and so you have fewer customers, you have fewer people visiting. So if they're visiting, they're spending less money. The cost for everything's going up. So again, they're spending less money at going out to eat and things like that. And then the cost for the locals are going up. The cost for the businesses are going up. And it's creating this really tough situation where it's pricing a lot of people out of the market, right? Because now, when prices were 20 to 40% lower, just 5 years ago, locals could go out and they could spend some of their money without going broke supporting other local businesses. Now that prices have gone up and then locals aren't making as much money, they really can't go out and do that. And so you're totally reliant on this tourism sector. And anyone in tourism knows there's some years where it's really good in some areas, and some years they're a little bit down, and it kind of goes in these cycles. So it's an issue, and I think it's going to be magnified over the next coming months and years.
Yeah, I agree. Just go back 3, 4 years ago when no one could go anywhere, right? And everybody was shut down, and going out to eat was really a luxury then. It's always been
Yeah.
more of a luxury thing, and people did a lot back in the before COVID and all that stuff. But in the last couple of years when everything shut down, like now it's like it's a joy to go out to eat. But now people feel like it's painful to go out to eat because it's expensive.
Yep.
And like you said, like they want to cut corners as much as they can, not tip people. But these restaurants are hurting too. And like everywhere, there's like it's death by a thousand cuts.
Yeah.
Like I don't know if you've seen it, but the gas prices just jumped up again. I'm like, I don't know what's going on there, but I haven't heard about the Strategic Petroleum Reserve. We could be out of that soon. I know they tried to stretch that as far as they could to get to November for many reasons, but we could be running out of that. I know that they changed the rules about when they put ethanol in the gas to making that year round to make that stretch. So they're doing all these different things to make things stretch as much as they can, but people just can't afford things. And that's why they're turning to people like us and like say, what are the alternatives? Should we buy silver and gold? Should we get out of that? Or should we go to the digital gold of Bitcoin and Ethereum and other cryptos to get out of the dollar market? And that's why we're seeing what we're seeing in crypto. And that's why we're going to spend a lot of time talking about cryptocurrency and Bitcoin. It's such a hot topic now. I mean, the name, like one of these, this article came out last week from Zero Hedge about the 1% allocation to Bitcoin. I made a video on that as well. I put that up this week. But that was the topic. I'm not going to do the scroll, but I made 2 copies of it open here. So at the bottom of the article,
about this.
At the bottom of the article, it said the theme is that the institutions are coming, the institutional investors. I'll get to that in a moment. The core drivers of the ETFs, and the mantra will be to put 1% into Bitcoin. Now that's been a mantra for a long time on CNBC when Pompliano was on there.
Yeah.
But if you scroll up a little bit in the article, you'll see the divergence between gold and Bitcoin. But the highlight part that I put out here is that with Bitcoin about $1 trillion market cap, that was when it was 50,000. Now it's 60,000. So now it's 1.2.
Just in like a week.
Yeah, just like a week. Now, like the numbers they throw out are between 150 trillion to 300 trillion in the global bond market. So if you take 1% of that, that's $1.5 to $3 trillion on top of the 1 to 1.2 of Bitcoin. You're doubling or going up 150% more. You're looking at $150,000 Bitcoin pretty easily if that 1% rule from the bond market happens. So that's pretty crazy numbers.
Yeah.
I mean, just like you see, like these other articles here, this came out on Zero Hedge. Like this has never happened before. The RSI, which is the relative strength index, it's at an all-time high. It's at 88. Anything over 70 means it's overbought, but it is super high. It is way up there, and it broke the all-time high. It's doing all-time highs. Like it's surging. It's at 59K now. It's in the 60s. Another article here from Cointelegraph about another. It broke against a dozen different currencies. It used to be trailing back when looking at the gold price. The dollar was the last gold price that really went up and broke an all-time high, but other currencies broke it. Now Bitcoin is breaking across all different currencies.
Yep.
And it's so high that even Coinbase went down. So there's lots to talk about here. We talk about the crypto and the fear and greed index. Dylan, where do you want to go with this conversation?
Yeah, all over the place. And that's what happens in a Bitcoin bull market when just price surges and you get some of the frenzy and mania that happens. And so obviously we're here to help calm you down, give you the right tools and resources so you can be prepared, not scared, and be able to capitalize things, not be swept up by the emotion of the crowd, which is happening now and is going to happen more in the future. So I want to go back to the 1% allocation because I think there's some nuance there and there's some really important stuff. And this is something that I saw a video the other day. It was a flashback to 2019. It was the fall. I think Bitcoin was like, I don't know who the guy was, and he didn't do a great job in the interview, but basically it was a clip of him saying that people should allocate 1 to 2% of their portfolios to Bitcoin. This was right before we had the last halving and COVID-19. It was right before that, and before the price starts skyrocketing, because it was in 2020, right after that happened. Halving happened in spring of 2020, and the fall of 2020 was when MicroStrategy bought. So basically, it was around like 6,000 to 9,000, and then it had a flash crash to like 3,800 when the pandemic was announced, and then we had that basically K-shaped recovery, and Bitcoin went on to go up to 27, then up to 40, 50, the initial high, and then down, then back up. Anyways. In the clip, he was advocating for them. The reporter was just laughing at him like, oh my gosh, like you might as well just like set your money on fire. And when he was advocating 1%, and now it's becoming more and more common. That was a conversation that whenever you listen to a Bitcoin podcaster or influencer, they would interview someone in finance. They would always say like 1 to 5%, right? That's a safe allocation. And I had a conversation with a local small bank the other day, or probably about a month ago. Not the other day, so about a month ago, and they said they were limited to about 2 to 3% of exposure they could have to Bitcoin crypto projects and things like that.
That's kind of a rule across all banks, is what I've heard.
Yeah, and so that's 2 to 3%, and then to stack on this. So this is all leading up to like the thing that Michael Saylor's kind of been hammering home since he bought Bitcoin. He's like, a lot of companies can't buy Bitcoin, but right, they're going to start to be able to, and even like the least conservative of the ones that can get into the space, like 1 to 5% is a reasonable amount, right? It's not going to make or break your portfolio if you lose it. But he's like, what's going to happen is initially they'll buy it, and depending on where they're at the cycle, they may not get the returns. But if they hold that for 4 years, the guy or girl who said we should buy Bitcoin, they're going to be like the star of the show if they're still around, because if they weren't fired in any sort of bear market between then. But they're going to be the star of the show for a minute, and then next thing you know, they're also going to be like the enemy, because the CEO is going to go to that person and be like, why did we just put 1% in? The 1% outperformed the rest of our portfolio. Why didn't we put more? And so that conversation is going to start happening. And so that's why whenever we talk about the percentage of the portfolios, it's like you get the phase one, which is more companies and individuals are considering Bitcoin as a real asset to invest in for their portfolios in the range of 1 to 5%, right? That alone increases demand. Then you have the ones that had done that previously, that put 1 to 5% in and saw the amazing returns that they had. Like, their portfolio didn't blow up, they didn't lose all their money. Well, they're going to be saying, okay, well, why didn't we put more in? So they're going to be doubling down. Okay, and again, more demand. And as this happens, and then the headlines and the articles will come out, and we have this story about MicroStrategy we'll share here in a minute. Just then other companies are gonna be like, wait, my competitor's doing this. I can't fall behind, because if they're allocating more to Bitcoin, if I'm not, how am I going to keep up with them, right? And it's going to create this feedback loop that people in the Bitcoin space have talked about for a while, where it's going to lead to some wild times if it plays out like we think about it. And I think we have an article about God candle that we'll get to in a minute. But that's my like rant on the 1% allocation.
Well, yeah, I think that's a good rant, as you put it. But I think that the 1% rule, it's going to drive like performance, massive returns and massive performance. It just encourages more behavior like that. So if you put 1% in, and if it doubles, right? It's just say you have 1% of your portfolio, and that 1% doubles. Okay, that does 100% return. Now, say that the rest was in stocks and bonds, that does the normal 10%. That 1% did 10 times better than the rest of your portfolio. So now, looking after the fact, that 1% is now like 10% of your portfolio when you put the aggregate together. So now you're like, okay, not only will you want to put more into it, but you've already got more and more percentage wise in Bitcoin because it outperformed in the first place. So it will start to cascade and just amplify, and you'll go from the early days of CNBC, when Pompliano was on there, when I was really first starting and barely scratching the surface, and like the only one that was talking about Bitcoin, to the fact that now it's mainstream and CNBC covers Bitcoin and other cryptos every single day. Yeah, that's what will happen, and that's what will happen. That's what the ETFs are doing. But as we've pointed out in the past, there are concerns about the ETFs and those choke points of the ETFs, because there's some centralization, which everyone's concerned about. If you dig into it, companies like Coinbase, and let me start with sharing that article here. So let me see, make sure I get that. Yeah. So that article. So this week, and in case that you're new to the space, right? So this is what happened this week. Bitcoin was so high, it crashed Coinbase. So Coinbase went down. People were looking at their portfolios. I was getting texts yesterday saying Coinbase went down. My balance looks like it's zero. They weren't concerned because they kind of knew what was going on because they had experience. But newer people were probably freaking out because like when we were starting out and we in the earlier days of Coinbase, they would play games and they would say that there's some shutdowns or like you couldn't pull your stuff off for days or you would get allocations or whatever. But there's lots of people that are charting this stuff right now because Coinbase is basically the avenue and the conduit for a lot of these ETFs to get into Bitcoin. Coinbase only has so much, like their supply is dwindling. So with Bitcoin surging, people want to cash out. And we'll talk about selling and how to take profits, and not financial advice, of course, but we'll talk about that conversation because it's an important one. We'll get to that in a minute.
Yeah.
But, and by the way, please, if you like this kind of content, please like, share, subscribe, give us a thumbs up. We really appreciate that. We always forget to say that. I'm getting better at mentioning that in the first 10 minutes. Almost got there this time.
I want to bring up something that an important thing that you said. Two points. Right. Okay. One was the allocation. So like if you had a 1% allocation and then Bitcoin doubled, now it's a 2% allocation. In general, that's not really a problem because you generally don't have that type of performance from your traditional investments. Like you're looking at, S&P 500 range between like 7 and 10%, annual returns, right? That's like what you'd expect. And so you're not getting massive 100% returns in any sort of investment portfolio. If you are, like you're the top hedge fund for a year or two, and then you probably blow up because you're taking out enormous risk on your investments. But like getting 20% returns is pretty big, and that still takes a while to change the fundamental allocations of your portfolio. But if you have an asset that doubles and you had 5%, now it's 10% of your portfolio. And when you start getting into that territory, it runs you into certain restrictions on what you can invest in and how much of your portfolio you can invest in based upon your investment charter. Depending on who you are and what you're doing for investing. And so then you have to reconsider. And so there's two things that could happen here. The more companies that run into that problem, the more likely it will be made not a problem anymore, right? Mm-hmm. It'll be fixed. The laws will be rewritten. The investment charters will be rewritten, or Bitcoin will be an exception or whatnot, right? But also in the short term, you could run into forced sell pressure on Bitcoin because you have these portfolios. Bitcoin did so well, they have to sell because they can't hold that large of their portfolio in something like Bitcoin. And so that'll be interesting. And then going back to your point on the centralization with Coinbase holding, Bitcoin for the ETFs, you might have, something that happens there where, again, they have to do that or it can run into problems. What do you think about that, Jeff?
It's an interesting point. I think that you're right about the charters, and there are certain rules that people have to understand. Like that's one of the reasons that a lot of micro caps couldn't get involved in Bitcoin because it was such a small market cap. Like you can't buy things except for like Bitcoin and Ethereum because the market cap isn't large enough or significant enough to even be a part of their charter, because you have to be at say like $1 trillion valuation of our market cap for them to even consider it. So Bitcoin and Ethereum are really the only two that are even on the table for them to consider, and Ethereum's being looked at ETF soon as well. So you're going to get other products that are going to get ETFs. But yeah, I think what you'll see is that there'll be different ways to viewing that. And when returns are this good, they will find ways and strategies to bend the rules, change the rules to make that they don't want to give up those returns. So you may have funds like reallocate or buy a company or spin off a company that may become a Bitcoin mining company or a Bitcoin investment fund or something, or a hedge fund spins off out of this that has a different charter. And like it could be like we'll talk about MicroStrategy, which is basically a de facto ETF for Bitcoin. Mm-hmm. Their entire value is basically based on Bitcoin, but that will be like they're not going to want to. Wall Street never likes to give up profits. So with all these profits, the rules will change to allocate to allow them to make as much profit as they can, but they're going to have to learn. Like we talked about the possibility of Coinbase going down the derivative road. They are mentioning that in their 2024 outlook from Brian Armstrong. That's a concern, and people are to be really concerned about, like, is it really their Bitcoin? If you have to go onto a website, it's not your money. It's the website's money. And if that website goes down, that's not your money. Like it's gone. It's whoever controlled it last. They have it. That's why we say not your keys, not your coins, not your Bitcoin. You have to have your Bitcoin. You have to get in self custody. Talk to Dylan, talk to myself. That's what we do. That's what we do with our community, and teach people the right practices so that if Coinbase goes down, you're not worried because like, well, maybe I had 1 or 2% there because I was playing around with it. Maybe I was trading something. That's fine. But 2,000 out of my 100,000 was at risk. But my other is in cold storage. It's on a wallet. It's in my house. I know where it is. I have full control over it. That's what you need to be concerned about.
Yeah.
But yeah, to your point, I think companies are going to bend the rules, change the rules, because they do not want to give up these profits. Once they start seeing this cash cow that is Bitcoin and how much it's surging, and again, price is just a ratio of two things. And you can think of Bitcoin and the US dollar as two cars on a super highway. They could be going in different directions. The purchase power that we're all seeing of the US dollar, which we just talked about, it's going down. $20 for a Happy Meal, gallon of gas of $5 or more. That keeps the value of that dollar keeps going up. I saw this stat. Would you believe this, Dylan? In 2019, I didn't know this until I saw it yesterday.
Yeah.
In 2019, this happened for the first time, and it's been this way ever since. There are now more $100 bills in existence since 2019 in every year than $1 bills. So
that makes sense.
Yeah, because you have to spend, who spends it? Like, what's a buck anymore? Like spending $1, you have to pull out C notes, and like, there's lots and lots of $100 bills that you have to use. And they print more $100 bills than they print $1 bills. And that's an interesting stat to note. It's like, this is how you get towards the monopoly money.
Yeah, exactly. And I want you to could you bring up the chart on the God candle?
Absolutely. Let's go there next.
Yeah, because I want to talk about this because we talked about Bitcoin supply. We talked about the ETF, not necessarily like if you have Bitcoin exposure through an ETF, it's all well and good. And in general, the futures or the spot ETF should have the Bitcoin in custody that's equal to the amount of Bitcoin shares they've sold to the ETF, right? So it should be a 1-for-1. Am I off on that, Jeff? Or is it should be a 1-to-1 ratio? Like if you have one Bitcoin.
I was looking at the chart. The spot ETF should match. Like so if they have like $1 billion in assets, they better have $1 billion of Bitcoin.
Yeah. So it should be a 1-to-1. But historically, we've seen when they've done that with different assets that oftentimes they don't quite do a 1-to-1 because at a point in time happens where they can't necessarily fulfill those orders. And so they have to add other assets in the mix so that they can keep the ETF alive and things like that. So the reason why I bring this up when it comes to Bitcoin is there's a fixed supply. And we have about 19.6 million Bitcoin have been produced out of the 21 million. And with the halving coming up, the supply is going to be cut in half every 10 minutes. And it's going to take until the year 2140 to mine all the Bitcoin that's out there. And one issue that could come up is if they can't get the Bitcoin for the exchanges. So if we run into a supply shock with Bitcoin, and this is where the God candle comes in, we thought it was wild that Bitcoin went from like 40,000 just a few weeks ago to now 64,000, almost at an all-time high, right? Unprecedented, right? We generally didn't expect Bitcoin to break its all-time high before halving, right? That's kind of a new thing, which could be a signal of new demand in the market. But people are starting to talk about there's not enough Bitcoin out there, and that might be one of the reasons why the price is moving like it is. And if there's not enough Bitcoin, you can't just make up more Bitcoin. You can't just make Bitcoin. And what will happen is I probably had the phrase wrong, but Greg Foss, he's a Bitcoiner. He's a former, bond trader.
Bond king, yeah.
And I think it's called a gamma squeeze or theta squeeze, something like that. And basically like where he's like traders talk about just like ripping your face off. The candle goes up so much, right? It basically gaps up in price. So it's like $60,000 today, and you think you're going to buy it. And so you get your money ready, you get ready to make the wire to whatever, exchange that you want. And then the next day it's $150,000, right? Moving to 200. It happens so fast. It phase shifts up. And the reason why that happens is because there's not enough Bitcoin. There's not enough supply of Bitcoin on the exchanges to meet those orders. And people but the demand for Bitcoin not only is still there, but is growing. And when that happens, like, because you can't fulfill it, like you have no liquidity in there because people are like, wait, Bitcoin just gapped up 10,000. I'm not going to sell. Like, why would I sell? Why would I sell into this massive candle up at this point in time? Like, I'll just hold it because people still want it. And so that's going to be an interesting scenario, especially with these things like with the ETFs, is what happens if they can't get access to the Bitcoin? or it gaps up so much. What's going to happen to their clients' portfolios if an event like that occurs, right?
Yeah, I've been seeing lots of charts. I don't have one prepared for today, but I saw one yesterday. I can't remember the channel. I otherwise I give him credit for it, but it was a logarithmic show of the supply just going down. Everybody's talking 2025 or sooner. I've seen it as close as the halving, and I'll put this up there on the chart in a moment. We'll talk about the halving, but the halving is less than 2 months away. According to this one, it's 51 days, middle of April, and that's the day when the supply chain gets the shock. That's when, or the supply of Bitcoin gets cut in half.
Yeah.
So instead of 900 Bitcoin a day, there's only 450, and but right now ETFs are buying more than 1,000 a day. So they are demand is outstripping supply, and I've seen this. I remember like when Bitcoin went to 20,000, and that week when it went from like, I think it was, 2019, 2020, that December to January time period, you saw those candles in Coinbase, and if you put in a limit order to buy, it didn't happen. It did, because it just skipped right past you. It just kept going, and you could not buy fast enough. And they had trading bots on there and everything, but they kept raising the price, thinking that at some point it would max out, and that the sellers would eventually show up, and then they could balance out their supply.
Yeah.
It didn't happen. The price kept going up and up and up. And this is why we talk, reflecting back to Coinbase, like if you get in the habit of like you take a good practice, what they don't like, of actually taking your coins off of their exchange, they will limit and throttle you and say, 5 or 7 days to get it off, and because they're hoping that the seller will come along so that they can renew their supply. Mm-hmm. And there's also been stories, and it hasn't been really proven, but other exchanges they'd share their volume so that the supply looked like larger than it was. Because you have to keep in mind that these markets, these market makers, they make money by making markets. By the more exchanges, they get a fee on every one. That's how they make their money. So they want people trading, but if there's no one to sell, they're not making any money. So they got to encourage that selling at some point. So they raise the price to make it encouraging to sell. But it's tough. It's like you'll see these God candles happen, and it's just a reflection of this demand outstripping supply. And at some point, it's going to happen, because there's never been an asset like this where there just isn't enough. There's nothing, you can't meet the demand, and that we're getting close to that point. And it could be 3 months away, it could be less, it could be 18 months away. But at some point in the next 2-year cycle, like between the halving and 2026, if we even get there, there's not going to be enough supply to deal with the demand. So the price must go up to try and find some new price, what they call price discovery, to saying where is that market equilibrium where people are willing to sell it, like maybe $200,000. They'll sell it. But why would you sell it if the dollar is losing its purchase power? That's what people are concerned about.
Well, that's basically what happens. So, there's people that have different perspectives on this. And there's the Bitcoiners like myself who you think Bitcoin is the exit strategy. It is the new market. It's the new system. And there's people that realize that and operate accordingly. And there's people that think Bitcoin's cool, but the system we have is the system. And if that's the case, you'll be able to make exchanges back and forth. But if Bitcoin is the new system, there's a point in time where basically the bridge closes. And that happens if Bitcoin goes from $60,000 to $120,000 tomorrow, you're basically, what has happened is the purchasing power of your dollar got cut in half, right? It's not that Bitcoin necessarily doubled in price. It's your dollar got cut in half, because if you held the Bitcoin the day before and you understand that Bitcoin's a new system, the next day you now have double the purchasing power. And so if you're trying to make these trades in altcoins and dollars, right, to make gains, that's all well and good. It still works in fiat world. It still works there. But if fiat world collapses and everything is collapsing against Bitcoin, you don't really notice it. Maybe we show the SAT Pulse, not the satpulse.io.
Yeah, I'll get that up.
So you can see the chart. If it's gradual, you notice it, but you don't really notice it. But if you have these phase shifts where all of a sudden your purchasing power is cut in half overnight, right? That's where you really notice it. That's getting into hyperinflationary territory. But it's almost like the reverse, because it's not like the prices of your goods and services in the fiat world are going up dramatically like they were happening in Weimar Republic in Germany, where they would change the prices every hour and things like that. They're not necessarily going up, but your ability to escape that system is being reduced, right? Because if you're in the Bitcoin system, your purchasing power is just constantly doubling here, right? 30% here, 40% here. If you start having that thing happen, and that's what can happen if they run out of supply and there's still the demand for it. You may not notice if you're focused on like just US dollars, but if you have an eye and you have attention over on Bitcoin, you'll notice pretty immediately that you can buy twice as much stuff tomorrow than you could today. And we experienced that just in the past 2 weeks with about 20 to 30% increase in price. Right.
Yeah.
And so the thing here is you might have these gains in these other assets, but you might, because we just talked about, you might not be able to even sell them for Bitcoin. Or if you can, those gains will be stripped away significantly because the premium on the Bitcoin is going to be so much higher. So you won't be able to convert that 1-to-1. And what will happen is you're just going to end up looking at numbers on a screen and reminiscing about the time you used to have almost this purchasing power, but you didn't sell in time. So we don't want that to happen to you. The lesson here, the takeaway is, it's better to own Bitcoin. A bird in the hand is better than two in the bush. Own some Bitcoin that you control yourself. And you can play around doing the other stuff, but make sure you're off zero and you have Bitcoin that you can control, that it's not dependent on anyone else. Because if that event happens, it's much better to have the Bitcoin versus wanting the Bitcoin. And just one final thing, Balaji, last year, almost about a year ago, he made his 100 Bitcoin to $1 million in a 100-day bet, right? And it's a good thought experiment to think about. If that happens, what does that look like? And it's basically a hyperinflationary collapse of the US dollar relative to Bitcoin. And so it's much better to have the Bitcoin, because you wouldn't be able to get the Bitcoin if Bitcoin went to $1 million, right? People wouldn't be selling. It wouldn't be there. And the ones that would be sold, it get bought up immediately.
Yeah, and that's a good thought experiment. But let me share that screen one more time, and I'll zoom in a little bit. But you can see here, and this is satpost.io. This is you can see the week price. Everything's priced in Bitcoin here. You can see that everything is lost. Almost cotton hasn't, but everything else is going down by 20 to 30%. Rice is going down 99%. That's crazy in a week. Yeah. Right. Everything is red because Bitcoin has gone up. Only thing that's green is MicroStrategy, and we'll talk about that in just a moment. But that would be a good segue. But the reflection here: price is a ratio of two things: what you're pricing things in and the thing itself. So think about when you're in, like, if you're at a yard sale, but no one has any money, you're bartering. You're in a swap meet. I've got T-shirts, you've got sneakers, and we're just swapping. Like, I'll give you 5 T-shirts for a pair of sneakers. That might be a great deal to you, but now we're trying to find value, and we're trying to have price discovery. Like, how much is our sneakers worth in terms of T-shirts? But then you have this category killer of like what everybody wants, which is Bitcoin, and everybody starts pricing things in terms of Bitcoin. In the United States, no one alive in the United States has ever seen a world without the US dollar in some way, shape, or form. So we're all mentally conditioned to thinking of terms of how many dollars does this cost? Well, pretty soon you're going to have to figure out, like, well, maybe we shouldn't be pricing it in dollars because dollars are garbage and the rest of the world is looking at different prices. And if I still want to go and get apples and other things at the grocery store and gas and things I need, like those, like, they're harder to get now because the dollar is losing its purchasing power. And that's what we're seeing, because we're masked by the fact that we're all like, these dollars, we're used to spending our dollars, and like, why can't I buy as much? It's because the dollar is losing its purchasing power. But the MicroStrategy that keeps coming up here. I'll bring that up. I'll bring that story up now.
While you're bringing that up, it's like people like to think that Bitcoin is the Chuck E. Cheese market, right? You eat your fake internet money tokens to buy the things, right? It's just kind of a gimmick, it's cute that you get your tokens and tickets at Chuck E. Cheese to buy the stuffed animals. Meanwhile, the adults there, when the kids are so excited, they want that toy at the top shelf. The adults are like, I could just buy that toy with my credit card, right? But the reverse is actually happening, is that the fiat world is the Chuck E. Cheese, where Bitcoin is the outside world. So it's a flip. The Bitcoin isn't the Chuck E. Cheese land. Does that make sense, Jeff? Like, people like to think that it is, But where it's the tokens, it's the fake money, it's cute. But the reality is actually the opposite, where soon the fiat dollar will be the tickets and the tokens. That's the perspective of someone who thinks Bitcoin is the new system. And if you're operating from that Bitcoin system, you're like, oh, cute, you're using your fake fiat money to buy the things, but I have the real money.
Well, I mean, that's I did a video on this too about Gresham's law. Like, this is exactly the definition of Gresham's law. Like, bad money drives out good, which means that, like, in the example I made in that video was like, it's funny how Chuck E. Cheese keeps coming up.
Yeah.
But Chuck E. Cheese inside of a casino inside of Las Vegas. Okay. Inside the Chuck E. Cheese, you're going to spend all your Chuck E. Cheese tokens because they don't have any value outside of there.
Mm-hmm.
But then you go outside of that Chuck E. Cheese in the casino, then you get casino chips, and they have value in that marketplace. But you go outside the casino, the further you get away from the casino, they don't have less value. So you start using things outside that casino. If you're in Michigan, you're not going to use like Las Vegas, like poker chips or the Chuck E. Cheese from Las Vegas because they have no value there. So the good, you spend the bad money, the money that like is accepted as fast, and spend it as fast as you can. And then you save the good. So in that analogy, the dollar is the bad money and the Bitcoin is the good. It used to be gold and silver. That's what people would want to hold on to, because you go all over the world and everybody accepts gold and silver as a form of payment, or you can exchange it for things. But now it's becoming Bitcoin. So that's the Bitcoin is everybody wants to hold on to your Bitcoin, spend all your bad fiat dollars and get rid of them, because this is like monopoly money. It's paper. It's worthless.
Yep.
And that's, I mean, you were spot on with that, but this is what MicroStrategy has figured out. And then I'll jump to that story. And again, Bitcoin, Michael Saylor had figured this out a couple years ago, and he convinced his team and his board that Bitcoin was the way. Like they put almost all of their profits every quarter, except for their working capital for like the next 6 months or so they stay somewhat liquid, but they buy Bitcoin every quarter. And now the value of the MicroStrategy firm is basically equivalent to how much Bitcoin they own.
Yeah. I think it's something like just in the price action over the past couple of days, because I think they own about 199,000 Bitcoin, something like that, that they made $400 to $500 million just paper gains just on their Bitcoin value, and their company alone, right, only does about 50 to 75 million a year, right?
Yeah.
So they were able to completely transform their company through Bitcoin. And it's wild to think about this. Like, they're small. If they're not a big company when you compare it, when like what is Facebook and Google and now Nvidia, they have market caps in the hundreds of billions to trillions. And MicroStrategy, only has $11 billion worth of Bitcoin. Okay, cool. Like,
but they repurposed and reinvented their company, and now they're basically a Bitcoin ETF. You can see that they're an $11 billion company. You could divide 11 billion by the price of Bitcoin on that day of that article, probably 60K. You're right. It's probably about 200,000 Bitcoin, rough, give or take. So their entire value of their company is their holdings of Bitcoin. They were the first ETF of Bitcoin before a Bitcoin ETF ever existed.
Yeah.
But this is sort of the things that economic preppers, if you have a business out there, we teach you that you can do the same thing. If you have a business and you want to take some of your proceeds, you can learn to do the same thing that MicroStrategy did, and we can teach you how to do that. Yeah. It's a great way to look at things and repurpose your capital. Why would you have your capital sitting in a bank doing nothing or maybe earning a few percent? Why not take some of that and repurpose it and put it into Bitcoin? Mine Bitcoin. Find other ways to get into a higher growing asset that will lead you to become the next MicroStrategy. Michael Saylor started it at some point. He was fortunate that he learned about Bitcoin relatively early for his company, and his boards was supportive of Bitcoin. And now look at them, and they're $11 billion company, and it's almost all Bitcoin value.
Yeah.
But those are the kind of things that we talk about, and we'll talk about. I think the last thing we want to talk about is the seasons of Bitcoin. But did you have anything you want to mention about MicroStrategy before we moved on?
Yeah. So we're not there yet. We kind of tried to get there last cycle. And again, this came up in the conversation I had with the bank. This is a common thing. Michael Saylor says it: never sell your Bitcoin. And you see these TikTok and Instagram shorts and YouTube shorts about these influencers and rich people and wealth strategists that say, you don't sell your assets to buy something. You take a loan out against your assets to buy the thing. right? Because the loan is tax-free. They have these strategies. Like the wealthiest people that own property in New York, right, that own Manhattan, they're not selling their property to go buy a G-Wagon or whatever they want to buy, right? They're taking loans out against it. They keep the asset, right? And then they take the fake money, a loan against the asset, and they know the asset will go up in value because this is all this is a game of acquiring assets, right?
Mm-hmm.
The asset will go up in value while the relative amount of the loan that they own for the asset will continue to decrease. That's why the United States is $34 trillion in debt, because we just keep, as long as we keep printing the money, the debt we had yesterday is always going to be less in total, relative to our asset value, because we've decreased the value of that those dollars, right? The debt. And so we're not quite there yet. And some people probably explained that more eloquently than I did, but we're not there yet with the banks and lending against Bitcoin. But there's going to be a day soon where that's going to be a strategy, and it's going to be a lot more viable strategy. Now, this isn't financial advice. If you're going to ever do something like that, you need to make sure the numbers really work and you work with a professional to ensure that it's a smart move. But that's going to come. And when that happens, why would anyone sell their Bitcoin? Why would anyone have this asset that they can get a loan against to go out into the market and buy whatever? They're not going to sell their Bitcoin. They're not going to do that. So that's what MicroStrategy is doing. They're never going to sell their Bitcoin. They now have an asset that they can leverage for the rest of their existence, for however long Michael Saylor lives, and then for whatever he puts in the charter after he dies, for what can be done with those funds. So that's something to keep in mind. And we're not there yet, but that is coming. And when that happens, things are going to get wild, folks. Things are going to get real wild.
Yeah, it's getting pretty crazy already. I mean, just to see it go from 50,000 to 60,000, just the average person that would hear about it, like it went up 20% in a week, and that wasn't even the biggest gainer. I mean, let me share like there's what we call the fear and greed index. It's kind of smaller on this chart. It's at 80, and there's a chart here, like a little bit further down here, that shows you like how it's been going up and up. I can max it out there. Well, in the one here, you can see it's really going up. Like anything over 70 is like it's pretty high. It's also on Coin Market Cap over in the corner, and so does I think CoinGecko does it too. But if you look at CoinGecko, and Coin Market Cap, this is the top 100 list, and there's the default view. They show like the 1 hour change, the 24 hour, the 7 day. Bitcoin's going up almost 20% in 7 days.
Yep.
But if you click the 7 day percentage, it's not the biggest gainer. You've got these other coins. There's lots of other altcoins that are going up. Bonk is up 100%. Theta's up 50%. I'll talk about that in a minute. And Dogecoin, all these other coins. These are the ways that you can sort of, if you get in the right project, you can sort of catch up to Bitcoin. Now, not financial advice, and obviously you wouldn't put all of everything into Bonk. That would be crazy, because Bonk is a meme coin. There's not really much there. But if you happen to hit and you get lucky on one of these, you can take profits. Then you could take profit into Bitcoin. Like you get, like if you put $1,000 in a Bonk, for example, and all of a sudden it's 2,000. Well, and that 1,000 just became 2,000. And even though Bitcoin went up 20%, you gained against Bitcoin. Mm-hmm. And you can change the view on this too. You can actually price things in Bitcoin.
I was gonna say it's probably a good time to mention that like the OGs have been doing that for a while, but if you're watching this and you're looking to make gains in other tokens and coins, especially with all the things we've talked about, God candles and that kind of stuff, supply shocks with Bitcoin, you probably shouldn't have your chart set on USD. You should price the things in Bitcoin, because that's what you're really competing against. Because
it's off the page, but
like some of the ones that may have had gains in US dollars compared to Bitcoin, they lost out, right? So you should probably price everything in Bitcoin and operate from that strategy. And if you aren't doing that yet, you should learn how. I know it's something I myself have to do more of, but
I don't know why it's not doing it, but you should look things in terms of Bitcoin. But if Bitcoin's up 20%, you want to beat Bitcoin. Otherwise, you're not really making any gains.
Yeah.
And one last thing that we want to share, I think, for today is, there's two things to share. But this is an important chart to see. And this is the 4 seasons of cryptocurrency. And this is what we've seen time and time again. What happens, Bitcoin will surge, and then money will roll out of Bitcoin into the next bigger ones, which is Ethereum is number 2. And then the larger caps, like your top 20 or so. And then alt season games will start to happen. That's where everyone's taking their profits, and they're saying, what are these little other projects I can invest in that might go up 10, 20x? and I can take those profits and roll them back into Bitcoin and play this game all over again. So
Mhm.
that's what's happening. And one of the things that I'm looking at and what we talk about in our community, there are different topics that are out there, and there's a new topic. Like we've had NFTs in the past that was hot. We've had DeFi. The latest one that I'm looking at is something called DPIN. Now, DPIN, it sounds weird, but it's decentralized physical infrastructure networks. So what this is, I'll share this article. I'll put it in the show notes, but let me get back to where we're at. But DPIN, I've only been looking at it for a few weeks, but it's getting to be a lot more popular. Think about incentivizing real world assets or real world investments based on cryptocurrency things like if you're going to use AI, or if you're going to be using text to video, like making videos based on things you say, like show me a countryside setting from the 18th century with a railroad and such, and then that's created. But the cryptocurrency helps to facilitate that. So it combines the world of crypto and AI and other aspects to incentivize physical behavior in the real world. So it's very interesting. It's kind of a new thing that there's certain projects out there like Theta, and there's a few others that are out there. There's lots of videos that are popping up around on the topic. It's cutting edge stuff, and it's really out there. As far as if you think Bitcoin is cutting edge, there's way more deeper edges that are out there, and DePIN's one of them. But this is the kind of things that can pop up and become like the next DeFi, the next NFT surge, the next big thing, and where everybody's hearing about AI and about all these automated stuff. But combining crypto with the real world, that's what DePIN is trying to do. It's interesting the way that they're trying to do it. But these are kind of things that we talk about in our community over at Economic Preppers, and let people know, like, obviously you want to know the basics. You want to know, like, if you're going to get into crypto, you want to know how to get into Bitcoin and do it safely. We don't give financial advice. We give education. So we let the people understand, don't leave stuff on Coinbase, because Coinbase can go down. Any website can go down. So you want to have control of your assets.
Yep.
So go ahead.
Oh yeah, I think that was great. I mean, I think we need to start wrapping this up.
Yeah, that's what I was just about to do.
Yeah, we covered a lot. So
we did.
Thanks everyone for watching, and make sure you like, comment, and share this. And then Jeff, do you have any final things before we wrap things up?
I just want to say, just keep learning. Ask people that you trust. Hopefully we're in that category for you, and we're here to to grow and foster our community, let you guys know what we're about, and like if you have other topics you want us to explore, to look at, let us know. We're always looking for new things to talk about. But like we could talk for probably another half hour, an hour, but this show is already over. What we said was going to be 30 minutes. We're almost at 50. So we'll wrap it here. We want you to be prepared and not scared. Dylan, any last thoughts?
Well, speaking of community, make sure to check out economicpreppers.com /inner circle. We can put that in the description below. That is our monthly membership where we do a monthly private AMA. We have some private Telegram groups. So if you have questions, concerns, just curious about things, we're there to help. We're there to be that resource for you. Especially when things get wild, it's always good to have something like that. It's $47 a month. So, and you get connect with a bunch of other people in the space that love crypto, that love being prepared. And we don't just talk about things like Bitcoin. We talk about some of the other economic prepping things that we like. But definitely check that out. Visit our website, economicpreppers.com, or check the description below.
Yeah, obviously we love Bitcoin, and when it goes up 20% in a week, we're going to talk about it a lot. But yeah. We talk about other things too, and we're happy to. But thanks for spending a lot of your valuable time. We really appreciate that. And choosing, you have a lot of choices out there. Thank you for watching. Be prepared, not scared, and we will see you next time. Take care.
Peace.